All right, welcome everyone. This is Bob Maurer. It is Friday, the 4th of October, around about 2 o'clock my time. We're going to do a review of this current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. We've got quite a bit of housekeeping to do here, as most of them are being canceled, unfortunately. We'll look at why. And a couple of them ended up flat. So we'll look at that also. All right. So let's hop into it. Dial into the portal. You'll see the most current PDF version right here for this upcoming week of 10-6. And here we have the sheet. So as you can see, it covers 2 pages. 4 on the first page are being canceled. 1, the bear spread in coffee, hit its target. So we'll look at that. We've got 321 here, rice, that we've been in for a few weeks, and we'll see how that one's looking for us. And then also 327 natty gas, been watching this one for about 5-6 days, nothing done as of yet. And then we've got 328 on the bottom here, lean hogs, that one should be filled, so we'll see how that one is looking. All right, so 4 cancellations, one that is now flat hitting the targets, and then a few that are ongoing. With that in mind, let's just take them. We're going to take them with the cancellations first. So let's look at corn. So this is spread number 320. It was the bull spread in corn, the D-March. Market, let me blow this up a little bit. Move sideways within a 17.5, say 2-cent range, and then about 6 trading days ago, we finally saw a probe to the upside here, but unfortunately, our entry level is down here at negative 19.5 and negative 21. So nothing done if you're waiting to get in at our levels. And I did walk it forward, meaning how would it look if we got in today or yesterday, going through to the end of the window here on November 1st. And the answer is it doesn't look like these entry levels are obtainable any longer. And then also the risk reward gets a little skewed. So I am going to recommend, unfortunately, we were right in the direction, but we were not on board. So I'm going to recommend that we cancel this one and we'll just look for another opportunity in corn down the road. So my advice is to cancel strategy number 320, the bull spread in corn. Then the next one is sugar, number 322. Kind of the same story. Looking to get long. Our bids are underneath here at 123 and 111. We did have a shot here on these 3 days that kind of pushed down, but didn't get down to even the level 1. So, and then we had a little bit of a bounce again. Did not push into new swing highs, but walking it forward, the risk reward doesn't look adequate to me with only about 2 weeks left in this window. So again, right on the direction, right on the approach, just our levels were a little bit farther than the market was willing to give at this time. And I'm going to recommend that we cancel this one. So cancel number 322. We'll look for another opportunity in sugar down the road. That one is going to be off our board. And then we've got the soy meal. This is number 325. Again, same story. We were right in the direction, right on the analysis, right on the timing, wrong on the entry level. So we were trying to get in at negative 30 and negative 55. Market settled negative 13. So we are just looking for a little bit of a dip, at least for that level 1. And instead, it just shot up to the upside, just skyrocketed day 1, basically. Day 0 is our entry day, our start day. Day 1, it just pushed on up through all 3 target levels. So the math was right on the targets. Unfortunately, we did not get on board before it headed on up there. So again, missed opportunity. We'll look for another opportunity in soy meal down the road, but for 325, I'm recommending we cancel this one. And then bean oil, and I know they're both products of the crush for soybeans, but it's hard to say they're really correlated anymore with soy meal and bean oil because bean oil's got the energy correlation. And what happened here is same story. So we were looking to get in at negative 24, negative 30 in this bean oil spread, and it pretty much just shot straight up to the upside and got through the one and only target that we had there at -1. Now since then it's come off, so it kind of looked to me like maybe we could stay on board with this one and see how it plays out, have it dip a little bit, and then have another test of the -1. It certainly may work out that way, but my analysis of walking this forward after it already made the move up and 4 or 5 days into the seasonal window is such that it's hard to put the risk to define the risk, and therefore the risk reward parameters just aren't lining up as they were just about 5 days ago when this thing started. So I'm going to recommend that we cancel this one also. Cancel number 326. Missed opportunity, and again we'll look for something in bean oil down the road. All right, so that is that. And then let's talk about coffee, which is the one that is flat, target achieved. So the strategy on this one was to wait for day 0, get in at the close, get into the benchmark on day 0. So wait for the close on September 30th, which was Monday. Get on board with the first half of your allocation if you're a more aggressive average in trader. More conservative traders were sitting up here with an entry level of 345, so pretty big spread between the benchmark and level 2. But nonetheless, that proved to be the right thing to do, was get in on the close on Monday, because Tuesday we saw a bar down, Wednesday we saw another big bar to the downside, and went through both targets 1 and target 2. So this basically did what it was supposed to do in a hurry, and you had to be willing to get in on the close on day 0, which was Monday, September 30th. All right, so this one's going off the board as a winner, some level of realized gain, and it happened pretty quick. So we'll look for another opportunity in coffee down the road. So that is coffee. Did what it was supposed to do, but did it a lot faster than I thought it would do it. And then we've got the ongoing spread. So let's look at these. All right, so rice number 321. Let me blow this up here. Short from -12, short from -15. If you're an average in trader, give you an average about -13.5. Today's last trade was -14.5. So either one of the more aggressive, both the more aggressive average in traders and the more conservative level 2 traders should be in and sitting with some level of unrealized gain. Market rallied for us. Then it broke pretty good. It got down to -19.5. Our target's -22. I walked it forward. Strategy still looks good, so I'm not going to change anything at the moment. We'll see how it trades into the first few days of next week. Wouldn't surprise me if it retests this white line up here, which is right about where we got in at the -12 level, second level that is, and then falters back on down. So we'll just see how that plays out. But for right now, both levels should be sitting with some level of unrealized gain and no change to the strategy at the moment. So that is 321, the bear spread in rough rice. Then we've got natty gas number 327. So we are looking to get in at 372 and 397. 372 and 397. We're looking to get short. As you can see, the market settled at 317 on Monday. That's our benchmark. So we were looking for about a 60 or 55 point improvement on that to get in at level 1. And the market started moving that way, and then today had a big bar to the downside. So it's not looking as viable, but I want to stick with this one because, as you can see, I drew a triangle here, and this is a consolidation that's happening. So a lot of things could happen, but in my mind, perhaps this thing breaks down through the bottom end of this triangle and it'll hit that second target, and then we're probably done with this trade. But if it gets down to, say 264, maybe 272, something like that, and kind of holds this upward trending line at the base of the triangle here, then maybe it'll turn around and squeeze out some of the best shorts, which would drive it up towards our level 1 of 372 potentially. So I want to stick with this one. I just want to see what happens over the next few days. It doesn't look as likely, but nonetheless, walking it forward, it still looks good to be short. It's just that our levels to get in right now don't look as likely, but I want this triangle to play out. So we start with our seasonal analysis, look for tendencies that have some kind of robustness to them. Just make sure we can define the risk and the reward, make sure it looks good within today's chart's construct, meaning the chart you're looking at in front of you there. Make sure it makes sense. And all that does, but the way things looked on day 0 may look different than the way they look on day 6, 7, 8, 9, 10 into the window. But for right now, I just want to see if this thing holds and pushes on up. So we adapt as this thing evolves, right? That's what I'm basically saying. We'll see if this consolidation either breaks out to the downside, which probably means game over for us, meaning we're just not going to get on board, or perhaps if it can push one more push to the upside for whatever reason, whatever catalyst might happen, then we might get a shot of getting in this thing. So we're going to stick with this one. So basically, it's a long-winded version and rationale of saying no fill as of yet and no change to the strategy. Let's see what happens next week. So that's 327. And then we've got the last but not least, the lean hogs here. Okay, so this is strategy 328, bear spread lean hogs. Everything going to plan so far, meaning if you're the more aggressive average in traders and you were looking to get in, you should be in at negative 57 or better. And that's where it settled on day 0, and that was our first entry level. And obviously you could have done or better if you elected to do so. And then the second level is negative 5, and we got that today. So the high today was, I think, even money, if I remember right. Let me see. Yeah, the high was even money. Negative 5 is our entry level, so you should be filled. So both levels are filled. Okay, the more aggressive average in traders are going to be sitting right now with an average of about 30, negative 30 as a price, give or take. And that would be sitting with some level of unrealized loss. Level 2 traders, more conservative, should be sitting with some level of unrealized gain. And again, everything's going according to plan. So looks good. So no change to the strategy, and both levels are filled. So we'll see how this plays out. Keep an eye on it closely over the next week and adapt accordingly. All right, so it looks good there on 328. Okay, so to summarize, basically we had 4 strategies that I'm recommending we cancel because we missed it. We have the coffee that is now flat because the target was quickly achieved. Okay, and then we've got the rough rice. No change to that strategy at the moment. We got nat gas, no fill and no change. And then we got the lean hog, which is fills for both levels, but no change. All right. So that is that. There might be a couple new strategies for next week. I'm going to work on that latter part of the weekend and get those out there and published for you to peruse. So you'll be set for those when they occur. All right. Okay, I hope everybody's had a great trading week, done well this week. I hope everybody's got a nice weekend, little getaway set up for themselves for the weekend, and I'm going to leave it there. Thanks so much for watching.